Hello and welcome to this May 19th, 2024 edition of EB's Fab 5. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be your host here just for the next 10, 12 minutes or so. As I go through some charts, I want to focus today on short squeeze stocks. Last week in the stock market, it was really short squeeze mania. We had a number of stocks that were making massive moves. And I want to go through some of those charts with you and show you those charts and the moves they made. But before I do, I want to go through a chart list that we use. So let me pull that chart list up. It's our short squeeze chart list, and you'll see it right here. We do this for our members at EarningsBeats. We have a number of different chart lists, but this one is focused on the short squeeze stocks. These are stocks that are heavily shorted and have the potential at some point to catch fire and move to the upside. I always refer to this as a short-term market inefficiency, where at times we will just get demand that overwhelms supply. And when that happens, it also puts those who are short selling in a pickle, because you've got, they've already sold their shares at X level. They haven't bought them back. So the way a short sale works, if you're not familiar, is, I'm on the long side. So I've got my shares at my broker, and they're in the broker's name. I mean, some of you may have your own shares and they might be in your safe deposit box. If that's the case, those shares cannot be shorted because the brokers don't have access to the shares. But most people, when they buy shares, don't get the actual certificate. They're held in the street name. And so what brokers are able to do is they're able to use those shares that you're holding and lend them to others who want to borrow them for just a period of time while they short the stock. So they take borrowed shares. You can't sell a stock that you don't own, right? But you can sell a stock that you've borrowed. So, I mean, just give you a really quick analogy. Let's say that somebody next door neighbor has a car. One of these really nice, Lamborghini or whatever. And for some reason, I think that value is going to go down over the next couple of weeks, month, 2 months, whatever. So I go over and I ask my neighbor, hey, can I borrow your car? And they're like, okay, I'll return it to you, and they're like, okay, probably not going to let me borrow a Lamborghini, but stick with me here on the story. Anyway, I get that Lamborghini and then I go and I sell it. And with the idea that I'm going to buy it back cheaper, and then I'm going to return it to my neighbor. And so I profit when that price drops. I never owned it. I borrowed it. And that's what is taking place in the stock market with short squeeze stocks. All these stocks are available at the broker. Somebody says, hey, I want to borrow some of those shares. And the broker says, okay, I've got shares. Sometimes they don't have shares. But in this case, they give you the shares and you sell. So let's say it's $10 stock. You sell at $10. Your idea and thinking is that it's going to go down maybe to 5 or 7. And when it does, you're going to buy it and then return the shares. So you're buying at 5 or 7. You've already sold at 10. And so you make your money and you give it back. Everything works out perfectly. Well, a short squeeze is when you decide, oh, I want to borrow at $10 and I'm going to sell them. And the next thing you know, it's $15. And so you're like, well, do I buy at 15 and lose $5 a share? No, I'm going to hold on, or maybe I'll even short more. Then it goes to 20. And now you're stuck looking at, okay, let's see, I got 1,000 shares. So I got proceeds of $10,000. But now I owe 20,000 to buy these shares back. And then the next day it's at 30. And whoa. Now I owe $30,000. And then the next day it jumps at the open to 50. And trades up to 70 intraday. Now you owe $70,000. It's like, okay, this isn't working out very well. Now I've lost a lot of money. My losses literally are, could go to infinity. I don't have a fixed amount that I could lose on this trade. If that stock keeps going up, I just keep losing more and more money. And so you can see how, you might get a little bit more nervous than when you're on the long side. When you're on the long side, you invest 10,000. Most you can lose 10,000. But if you're shorting, you could lose a lot more money. And so it gets very, very emotional, especially once these losses start piling up. And that's what is referred to as a short squeeze. Couple things required. Number one, prices have to be going higher. No one's going to panic. A short is not going to panic if they're making money. So you got to get a breakout, number one. You've got to see massive volume. I'm not talking about 20% above average. I'm talking about maybe 5,000% above average, or 500%. Normally you trade 2 million shares and you're trading 12 million shares or something. You need a lot of volume, and I'm going to show you that in just a minute. But anyway, what we do is we keep a short list, or a short squeeze chart list, to keep track of all the stocks that have at least 20% of their float short. Float being just the number of outstanding shares available to trade. So if a company has got 20% short of its float, 20% of its float short, that means that 20% of all outstanding and existing shares have been borrowed. That means a lot of people are shorting. You get up to 30, 40, 50 or more, and then you're talking about a huge potential base of buyers if a stock breaks out, and you've got all these folks scrambling to get out of that borrowed position. Plus, you've got just regular traders seeing these breakouts and they're jumping in. And so you can see how the volume, or the buyers buying volume, would actually swamp the selling volume. So that's what you look for in a short squeeze. And we keep an organized chart list that we update twice a month for our members. We list them in the order of the most shorted percentage of float to the least, all the way down to 20%. And so this was our list. This was the list we sent out on May 1st. Now, if we look at the summary here, or not that price summary, you'll see that Tupperware was up 32% on Friday. MicroStrategy was up 10% on Friday. You can see a lot of these stocks did pretty well on Friday. But how about for the whole week? Over the course of the last week, FFIE went up 2,134% in 1 week. And it was up a lot more than that. It was probably up about 8,000 at the high. It was probably up about 8,000 during the week, 8,000%. So like I said, $1,000. I mean, if you put $1,000 into FFIE 1 week ago, you would have, at the high, if you were lucky enough to get out right at the high, that 1,000 was worth $80,000. So you can see the importance of keeping this list. The way we set it up is, again, we order it in the number of highest short percentage of float to lowest, and then we give you the short percentage of float. When GME made that huge run a few years back, it went from 7, I think, then got up to about 18, 19, then really exploded from there and went up to about 500. Its short percentage of float was over 100%. I want to say 140%, which I've never seen before. And quite honestly, I don't really understand how you can get one that high, but we had one that high. Anyhow, Riley, RILY, that is at 75.49%. Not really a short squeeze in play there right now, but then you can see the percentages on all these others. The higher the percentage doesn't mean that you're absolutely going to get a short squeeze. But if you do get one, you just know that the higher percentages mean potentially a lot more buyers. So let's take a look. I'm going to show you, might give you a couple bonus charts. I'll try to go through these pretty quick, but I'm going to show you 5 or 6 that really did some damage to anyone who was shorting. If you were on the short side on these stocks, you were probably feeling a lot of pain last week, or you got out, probably had to take a loss. Here's FFIV. Here's the one. It was down. If you look the first time that the volume jumped, and by the way, when I look at short squeeze stocks, I have a different chart style. One of the most important things to me is volume and where the volume is relative to its average. So the blue line that comes across here is the average volume on FFIE. And then you can see the actual volume that took place last week. Average volume going into the week was probably somewhere around 50 million. We traded one day last week 1.5 billion shares. So clearly it was moving up. And look at the price action. Anyone who shorted this stock over the last few months was all of a sudden underwater, and some underwater quite a bit. I mean, can you imagine shorting the stock at 5 cents and seeing it go to $4.90, or Actually, I think it was $3.90. So let's say you bought $10,000 worth or $1,000 worth, $1,000 worth at a nickel. When it gets up to almost $4, you would owe 80 grand. That would be hard to stomach. Now, we did see a big reversal. Maybe that's the end of this particular run. I always tell members that if you get into one of these and they start running, I can't help you as to tell you where they're going to stop running. You just have to be willing to just accept the money that you're making and get out of it and just be glad you're not the last person jumping in right before the music stops. So here is FFIE, and that was a tremendous run. That is on a par. That run last week to the high was on a par of the GME run that we saw 4 or 5 years ago, 4 years ago, I think. NVAX, look at the volume. You see what I'm talking about? When this volume hits, there's no question that it is a short squeeze. Look at the gap up. Even the first day after this came out, I mean, the low that day was 860, maybe 870. This stock went on 2 days later to be $15 a share. It's how fast they move when they move. I suggest to members that you take small positions in these stocks, because if you got in, say, the first day at like 8, thinking that was going to, or 8.5, 9, whatever, thinking that was going to start and trigger a big run, what do you do the next day when it opens at 6? Because they can go the other way and they can go down fast. So what do? Especially if you got a big position, that becomes very, very emotional trade. It's just hard to trade like that. So make sure you keep your position fairly light on these types of trades. PROK, I like this one. I think this one potentially is still in a possible short squeeze, although the volume would suggest otherwise. But we're not really seeing much selling. So it just seems like it wouldn't take much to trigger a new high. And if you get a new high, anybody who has shorted PROK since back in early October is losing money right now. So there's got to be some pressure. Now, the volume here, the average normally was actually back then was probably about 800,000, and we had about 2.7 million. So that's about 3 times. I mean, the volume definitely is moving up, but it's not exactly what I would want for a short squeeze. I'd like to see the stock trade to $5 or $6, and you start seeing 8, 10, 15 million shares. That's when you know you got yourself a really good short squeeze. ENVX. ENVX made this breakout on really nice volume, probably 5 times normal, but volume calmed down. We had some days under average, couple of days a little bit above average, and we haven't really gone any higher. So we've just been doing this sideways consolidation. I don't know that this short squeeze is over, but you now need probably to go back up to a new high to trigger another group of sellers that just don't want to take on any more pain. And the further you go back where you're trading above those highs, like right now, we've got highs from back around $15. I mean, some of these people that are short right now could be short from those levels. So if you start taking out other highs, like first maybe around 12.5, then you get up, you go through 15, then you're talking about anybody who's shorted since back in August of last year being underwater. And that's where you can get those really big moves quickly. Nope, didn't want to do that one. Let's move on to Tupperware. So Tupperware made a big move. You can see the volume really starting to increase here. Look back at what happened almost a year ago. Look at the move on Tupperware. So did you have to get the very first day? I mean, if you got the first day when the volume started to pick up, that would have been at probably about 80 cents, and the stock ended up going to $6. So that would have been 7 times your money in 7 days. I mean, that's how these things can move. But you can see here, we had 3. It looked like we were going, and then we went right back down. And so what are we going to do here? I like the fact that we went up on big volume, pulled back, and then we came roaring right back on Friday. This is one of those candidates. Maybe on Monday morning, we get a breakout on the, maybe we gap up $3. I don't know. GME. I mean, this was the one years ago that had the big run. We'll look at it last week. I mean, look at these gap ups. So if you're holding overnight on Monday, if you were holding it at the close closed maybe around 31. Next day, it opened over 100% higher at the opening bell. Now, if you want to hold on that, feel free. But if I get some kind of a move like that, I am definitely taking profits. I don't know if I'll sell the whole thing, but I'm definitely going to be selling something. Get your risk out of it. If you get a double, you can't lose money if you sell half. So just, you got to try to really remain calm and contain yourself, because sometimes these moves are absolutely crazy. Now, one that I just wanted to point out, we're going to wrap up with this one, that I thought was one that was interesting to point out because it really isn't a short squeeze. So we saw the jump here from 55 cents to about 75 cents. And it is a heavily shorted stock. It's shorted at more than 20%. But look at the volume on this move to the upside. This move right here on this gap up, we were trading half of the normal volume that day for the entire day. So if you had looked at it at any point in the day, you would have said there's not enough volume here to short or to go long. There's not a short squeeze in play yet. And throughout the week, we never even hit the average volume. So don't just look at the price and say, oh, here's a stock, it's up 40% today. It's on the short squeeze list, I'm jumping in. First of all, it's a 75 to 80 cent stock, and it averages trading 532,000. No, average is 1,124,000. So that means that the total dollar volume, average total dollar volume, is probably only about $800,000 for the entire day. I mean, we should see volume explode before I would be interested in this. And again, take your money. Anyhow, that's what I got for today. I thought you might appreciate the short squeezes, how they work, how we organize our chart list. All of our members have access to that chart list. In fact, I just updated it on Friday. So going into this week, we'll have a new list. I think there were 40, maybe 45 or 46 stocks on this list back on May 1st. It's jumped to 57 now as of May 17th to close on the 17th. So if you'd like to get that list, now's a great time to do it, because you can start your no-cost trial by clicking there. But we have our best deal of the year in place right now. Our spring special is underway. It goes until June 2nd at midnight. So you got a couple weeks here. Try it out. See if you like it over the next couple weeks. And if you do, take us up on our best offer. The offers will be, you'll extend from the end of your trial period. So if you come in for 2 weeks and you're like, yep, I really like the service, I'm going to give you a try. You sign up on the spring special. The extension will run from the end of your trial period. You're not going to lose the last 2 weeks of your trial period. I just want to make sure that everyone understands that. But you can go over to EarningsBeats.com, click on that link, come over and check out what it is that we have to offer. You can see all the things that we offer monthly, our annual plans, and then down at the bottom, you're going to see our spring special. Sign up for 1 year, you get 2 free months, 14 for 12. You sign up for 2 years, you get 6 free months. So you get 30 months for the price of 24. And if you buy 3 years, extend 3 years, we're going to give you a 4th year free. So you're going to get 4 years for the price of 3. I mean, our guidance, I'll put it up against anyone out there. I think our guidance has been absolutely spot on. And then all of the research that we do and the information that we provide, I think we have a tremendous value here at EarningsBeats. And I hope you decide to take us up on it. But try us out first, 30-day free trial. We'd love to have you. One final thing, if you like these videos that we do here at EarningsBeats, make sure you click the like button down below. We certainly would appreciate that. And subscribe to our channel. Then you'll be notified. Make sure your notifications are on after you subscribe, and then you'll know every single time that we've posted a video. You'll be updated on that. You can make sure you check it out. Anyhow, everybody have a great day. I really appreciate you stopping by, and have a great trading week ahead. Happy trading.